Hello students, a warm welcome to all of them. I hope you all are doing good and fine. As in our previous session, we were dealing with the chapter number 5, that is employment income. And under this chapter, we were dealing with the topic relating to employment benefits. Employment benefits are the benefits which are provided by an employer to his employee. And we had seen that there are two types of benefits: exempt benefits and taxable benefits. Exempt benefits means the benefits which are not taxable. Taxable benefits means the benefits which are taxable under the employment income head. And we had seen that for the taxable benefit, we have general rule and special rule for some type of benefit. The general rule applies to all the taxable benefit if the special rule does not apply. The general rule says that the taxable benefit amount for the employee will be the cost that the employer has incurred in order to provide the benefit to the employee and there are special rules for some benefits like vouchers, living accommodation, cars, private fuel, vans, beneficial loans, usage and gift of assets, living accommodation expenses. And we had seen a general rule relating to the taxable benefit which applies to all the taxable benefits. These two rules are important for all taxable benefit. That is, the taxable benefit will be reduced by any contribution made by the employee towards the cost of the benefit, and time apportion if the taxable benefit is available for part of the tax year. I hope this is clear. And in a previous session, we had read the special rule relating to the vouchers and credit cards, living accommodation, job related accommodation, expenses connected with living accommodation. In our today's session, we will be starting the taxable benefit for cars, private fuel and vans. The taxable benefit for cars comes into picture when the company car is used by the employee for his private use. When the company car is available to the employee for his private use, then the car benefit comes into picture because the employee is using the company's car for free of cost. So it will not be free of cost. We will be calculating a taxable benefit which will be taxed under the employment income head. When coming to case of private fuel means if your employer is providing the employee with private fuel for his private journey, then the private fuel benefit also comes into picture. And vans, and if an employee is using van, how we will be calculating the taxable benefit, we will be seeing in our today's session. So now coming to the cars, how we will be calculating the taxable benefit amount for car, and when does the taxable benefit for cars comes into picture. Where a company car is available to the employee for private use, a taxable benefit arises. When does a taxable benefit arises, students? A taxable benefit arises when a company car is available to the employee for his private use. Then taxable benefit arises. Now the question comes, how we will be calculating the taxable benefit. The taxable benefit is calculated as follows: list price, that is the list price of the car, into appropriate percentage less employee contribution for private use of the car. This is the this is the general rule which we have studied under the basic definition of the employment benefit, that there are two general rules: apportionment and reduce the contribution from the taxable benefit which is made by the employee. So this is the general rule and this will reduce our taxable benefit. How we will be calculating the taxable benefit on our car, students? We will be calculating the taxable benefit for car using the list price of the car into appropriate percentage. Now the question comes, what is list price and what is appropriate percentage? Now we will be seeing first the list price. What all elements are included in the list price? List price. The price of the car is the price, the list price of the car is the price when the car is first registered. So list price is the price when the car is first registered. The price includes including taxes is the price published by the manufacturer for the car on the assumption that it is sold in UK as an individual sale in the retail market on the day before the car's first registration. So the list price is the price when the car is first registered, and the price will include the taxes, and the price is set by the manufacturer assuming that the car is sold in UK and in retail market. Note that actual price paid for the car is not relevant. Whatever the price we are paying, it will be irrelevant, because the price we will be paying a lower amount when compared to the market value if we are getting some discounts. So discounts are not allowed in the list price, because what is the list price? List price is the price when it is first registered. It is set by the manufacturer assumption that it is sold in UK and sold in retail market, and the actual price which we are paying is not relevant. Consequently, employees of large company cannot benefit from bulk discounts their employer might negotiate with the car dealers. So the discounts will not be applicable in the list price. The list price will not include the discount amount. I hope this is clear, student. Now, the list price includes the value of all accessories and extras fitted at the time of issue. Whatever the accessories have been added and whatever the extra fitting that has been done by the manufacturer will also be included in the list price, plus the cost of any added subsequently. If further you are adding something, those costs also will be added to the list price of the car. And the reduced by an capital contribution made by the employee towards the original cost of the car, subject to a maximum of £5,000. So the list price will include all the value, will include the list price is the price when the car is first registered. It will not include the discount amount. It will include the amount of all the accessories which have been added and which have been added subsequently after the purchase. And this list price is only reduced by a amount, that is the capital contribution by employee, that is capital contribution by employee for the purchase of the car. What is the maximum the employee can contribute? The maximum is £5,000, students. If the employee is contributing 3,000, we can reduce the whole 3,000 from the list price. But if the employer has contributed 8,000, the maximum we can reduce from the list price is 5,000. This is the contribution which an employee makes towards the purchase of the car. I hope this is clear, student. But one important note is that capital contribution, this capital contribution of 5,000 made by an employee, which reduces the list price of the car, should not be confused with employee contribution towards running the cost for private use of the car, students. So as we have seen in a general rule that whatever the contribution is done by the employee will be reducing from the taxable benefit. Whatever contribution the employee is doing for running cost of the private use of the car is different from the capital contribution. The capital contribution and the contribution which an employee does towards the running cost of the private use of the car is different. So I hope these 2 points are clear, and these 2 points are very different. Do not please confuse that this £5,000 is the contribution towards the running of the private use of the car. This contribution is totally different and will be reduced from the list price. But the expense or the contribution which is made by an employee towards the private use of the car, it will be reduced from the taxable benefit. The capital contribution will be reduced from the list price, but the contribution by the employee towards the benefit provided by the employee or for the private use of the car will be reduced from the taxable benefit. I hope this is clear, student. This will help us to calculate the list price. These all are the factors which helps to calculate the list price. Now moving, we will be seeing how we will be calculating the appropriate percentage. As we have seen, the taxable benefit on car is calculated based on this formula, that is list price into appropriate percentage less employee contribution for private use of the car. As we have seen, what are the elements which are included in the list price. Now moving, how we will calculate the appropriate percentage, students. And this formula needs to be learned. It will not be provided in the tax sheet, students. Learn it. Very important. And from these employment benefits, you will surely get 10 to 15 marks. 10 to 15 marks will be there in your paper. So please do cover and do revise the rules for all the benefits which has the special rules. Now we will be seeing how we will be calculating the appropriate percentage. Appropriate percentage. Appropriate percentage we will be seeing for petrol and diesel car. There are many types of cars, students, like petrol car, diesel car, electric car, hybrid cars. So for each of these we have different percentage that we need to apply. But one general rule is that the appropriate percentage depends on the CO2 emission of the car under the case of petrol and diesel, because petrol and diesel uses the are the gases, are the type of which will produce CO2 emissions, and these are type of some which helps to run the car, and these will be producing CO2 emission, and the appropriate percentage in case of petrol and diesel car will be based on CO2 emission. But when coming to the hybrid cars, it will be based on the electric range. We will be seeing further. So the appropriate percentage for petrol and diesel cars, the appropriate percentage depends on CO2 emissions of the car. CO2 emissions per kilometer. So we will be seeing what is the CO2 emission the car is releasing per kilometer. If the range is between 51 to 54, then we have different percentage. If it is 55 grams, we have different percentage. If it is above 55 grams, we have different percentage. And there is two categories of car: the petrol car and diesel car meeting the RDE2 standards. These are the standards for emissions in Europe. These are the standards for emissions. And diesel cars not meeting RDE2 standards, students. RDE2 standards. So the percentage will be based on the CO2 emission, students. And if the we will be seeing the CO2 emission gram per kilometer. If it is between the range of 51 to 54, we have different percentage. If it is 55, we have different percentage, and if it is above 55, we have different percentage. And the car is divided into two categories: petrol car and diesel car meeting the RDE2 standard. In the examination, it will be clearly mentioned that the diesel car meets the RDE2 standards or it will not meet. If it is meeting, you will be using these rules. If it is not meeting, you will be using these percentage. So petrol car and diesel cars meeting the RDE2 standards, diesel cars not meeting RDE2 standards. So if it is between 51 to 54 grams, if it is 51 to 54 grams, the carbon emission, then the percentage is 15 percentage. And if it is 55 grams, the percentage is 16 percentage for petrol and diesel cars meeting the RDE2 standards. Now coming to the case of diesel cars not meeting the RDE2 standards, the appropriate percentage, if the CO2 emission is between 51 to 54, the percentage is 19 percentage, and if it is 55, the percentage is 20 percentage. So students, this will only be provided in the examination. Petrol car and diesel car meeting the RDE2 standard, this will not be provided. So how we will be calculating this? How to remember the percentage of diesel car not meeting RDE2 standard? Simply, diesel car meeting the RDE2 standard, what is the percentage for standards, the diesel car meeting RDE2 standard plus 4. So this will give rise to the percentage for diesel cars not meeting RDE2 standard. I hope this is clear. If the CO2 emission is between the range of 51 to 54, and if it is 55 grams, the percentage are for petrol and diesel cars meeting RDE2 standards 50% and 16%. Diesel car not meeting RDE2 standard is 19% and 20%, which is plus 4 of diesel cars meeting RDE2 standards. Now coming to the case of if the CO2 emission is above 55 grams. Each complete addition 5 grams emission above 55. So if above 55, whatever is above 55, for each 5 there is 1% increase in the percentage, students. If it is, let's take an example, if it is 60, till 55 you will be following these rules. Excess of 55 is 5 divided by 5. For each excess of 5, 1% increase will be there. Increase will be there in the appropriate percentage. Each complete additional 5 grams emission above 55 grams, an additional 1% is added to the 16% or 20% based on whether it is petrol car or diesel cars not meeting the RDE2 standards. So for each 5 grams which is above 55 grams, for each 5 grams 1% will be addition to the appropriate percentage. So an addition of 1% is added to the 16% or 20% up to a maximum of 37. So our maximum percentage, our maximum appropriate percentage can be 37. Can be 37. So let's take an example, students. If my CO2 emission is 105 grams per kilometer and it is a petrol car, so till 55 grams it will be, students, petrol car it is 16%, and excess above 55, the excess above 55 is, students, 50. For each 5 grams 1% increase, so the total increase, so the total 5 grams, how many times the 5 grams will be, students, divided by this, will be getting 10. So 10% increase will be, so our percentage will be 26%. I hope this is clear, student. Petrol car and diesel car meeting the RDE2 standard, the percentage is 15% and 16%. Diesel cars not meeting RDE2 standard, the percentage is 19% and 20%. And if the CO2 emission is above 55 grams, for each 5 grams excess of above 55, 1% addition will be to 16% and 20%, because till 55 grams the percentage will be 16 and 20%. Above that, for 5 grams 1%, another 5 grams 1%, another 5 grams 1% will be adding. The maximum limit for the percentage is 37, students. Note that the appropriate percentage for diesel car is 4% higher than for a petrol car. Plus 4 plus 4. I have already mentioned by me. Unless the diesel car meets the real driving emission 2 standards, that if it meets the standards, then the percentage of the petrol car are applicable. So these are the European standards for low nitrogen oxide emission, that is the emission from the cars for the environmental purpose must be low. If it is low, the percentage also will be low. As diesel cars which are not meeting RDE2 standards produces more emissions, so the percentage is high. So this petrol car and diesel car will be provided. For diesel cars not meeting RDE2 standard will not be provided, and the 37% will be provided in the tax sheet. And now coming to the appropriate percentage for electric cars. The appropriate percentage for electric cars is a 2% applies to electric car with 0 CO2 emission. If electric cars means it must be a purely electric car, full electric car. If it is full electric car, the CO2 emission will be, students, 0. So the percentage benefit, the appropriate percentage will be 2%. So we have seen the appropriate percentage for petrol and diesel cars, appropriate percentage for electric cars. Now we will be seeing the appropriate percentage for hybrid electric cars. Hybrid electric cars means, students, the cars which runs on both electricity and petrol or diesel. Hybrid cars means the car can run on both diesel also and electric also. So for hybrid electric cars with CO2 emission between 1 and 55 grams per kilometer, so electric cars, both electricity will also be used and petrol or diesel will be used, but the gram must be between 1 to 50 grams. The CO2 emission must be between this per kilometer. But when coming to the appropriate percentage, in case of hybrid car, the electric range of the car is relevant, students. The electric range of the car is relevant when calculating the appropriate percentage for hybrid electric cars. The electric range is important. When we have seen in the case of petrol and diesel, the appropriate percentage will be based on CO2 emission, but in the case of hybrid electric cars, the appropriate percentage will be based on the electric range of the car. Now, if the electric range of the car is less than 30 miles, it will be 14 percentage. If it is between 30 to 39 miles, it will be 12 percentage. If it is between 40 to 69 miles, 8 percentage. If it is between 70 to 129 miles, it is 5 percentage. If the electricity range is 130 miles or more, the percentage is 2. This table will be provided in the tax rate sheet, so you need not learn it or memorize it, students, because there is already a lot of things to learn. So the examiner has done a good job by providing this in the tax sheets and rates. So the CO2 percentage of petrol car and diesel car meeting RDE2 standards are included in the tax rates and allowances provided to you in the examination. The 4% supplement for diesel cars not meeting the RDE2 standard and maximum percentage of 37 are not provided. Okay, the 37% is also not provided, students. Only the appropriate percentage for hybrid car, it is provided. For electric car also provided. For appropriate percentage for petrol and diesel car, this only will be provided. These both will not be provided. So the maximum 37% you need to remember, and for diesel cars not meeting RDE2 standard plus 4. I hope this is clear, students. Now, by seeing some basic points for the calculation of the taxable benefit for car, we will be seeing some additional points. After covering these additional points, we will be doing some practical questions so that we have good grip on this topic. So moving to these additional points which we need to note when calculating the car benefit. These are very likely to be tested in the exam, but if your day is bad, you may get 1 or 2 points from these which can be tested along with the car benefit. So please do also learn this and have an idea of these additional points. These points are simple, not too complicated, students. So now we will be starting with the additional points to be noted in the case of car benefit. Where an employee changes a company car during the tax year, a separate calculation needs to be performed in respect of each car with appropriate time apportionments. Means, if I am the UK employee and my company is providing me car, and company A provides me car 1 and then car 2. The car 1 is provided for 4 months and the car 2 is provided for me rest of the 8 months. Then for this car, I will be calculating the taxable benefit separately, and the car 2 I will be calculating the car benefit separately. And time apportion, only for 4 months the taxable benefit will be there, because this is the general rule. And for car 2, the taxable benefit will be for 8 months, and that also needs to be apportioned. The first point mentions this, students, where an employee changes a company car during the tax year. He is having car 1 and then he changes the car. For the car 1, he needs to calculate the taxable benefit according to the time apportionment. Means when he is using that car, okay, he is using only for 4 months. So 4 months the taxable benefit needs to be calculated for the car 1, because both the cars will be having different list price and the appropriate percentage also will be different. whether it is diesel, whether it is electric, whether it is hybrid or petrol car, students. So when we are changing our company's car, when we are changing the car, we need to calculate the taxable benefit for each of the car separately. Where now coming, where the car is unavailable for a period during the tax year but was available both before and after. Example, it was under repair after a crash, students. If taking an example that a car is available to an employee, UK employee, and the car was not available for a period of, students, 2 months. For first 4 months it was available and last 6 months it was available. This 2 months the car had went for repair, because as I am the UK employee, I had met with an accident and the car got damaged and the car has went for repair. So for this 2 months the car was not available. It went for maintenance and repair. And after that, for the next 6 months, it was be available to me. So now we need to whether apportion or not. So the car benefit will only be apportioned if the rules are satisfied. What is the rule number 1, students? It must be available before and after. That is 4 months and 6 months. In between it was not there. So the car was available before and also after. The benefit charge is proportionately reduced. However, the reduction applies only if the car was unavailable for a continuous period of at least 30 days. You will only apportion or proportion the taxable benefit for car if the car is available before and after, and the car must be unavailable for at least 30 days. At least 30 days the car must be available. Continuous 30 days. At least continuous 30 days the car must be unavailable. So in that case, what we will be doing, students? In that case, we will be calculating the car benefit and apportioning according to the number of the months through which it was available to us. So I hope this point is also clear. The car benefit will only be apportion or proportion when these two conditions are satisfied, that the car is available before and after, and the car was unavailable for a continuous period of at least 30 days. Now coming to the third point, the car benefit we are calculating, students, no, the list price into the appropriate percentage. This benefit takes into consideration all running expenses of the vehicle. So there is no additional benefit when the employer pays for insurance, road fund license and maintenance. So if the employer is also paying the insurance of the car or for the maintenance or for the road fund license, these all will not be charged as a separate taxable benefit, because these are running expenses which is incurred by the employer, and these benefits are already included in the car benefit when we use this formula, the list price into appropriate percentage. So any additional benefits like maintenance, insurance and road fund license are provided by the employer will not give rise to an additional taxable benefit, students, as these benefits are included under the calculation of car benefit. Now coming to the fourth point is that if the my employer also provide me car, along with he also provides me driver. In this case, the taxable benefit for car is different and the taxable benefit for driver is different, students. So for car benefit, you will be calculating the taxable benefit. For driver, whatever the cost, what is the general rule? Whatever the cost the employer incurred in order to provide the service, in order to provide the benefit to the employee, that will be the taxable benefit for the employee. So I hope this point is also clear. If a chauffeur is provided with the car, this service constitutes an additional benefit. For students, it will be treated as an additional benefit rather than the car benefit. Car benefit will be totally different, and the chauffeur or the driver, chauffeur means a driver, it will be totally different. So car benefit will be different and the driver benefit will also be different. Now coming to the fourth point, a separate benefit charge is made for private fuel. We'll be seeing in our next slide. If your employer pays the fuel amount for your private use, a private fuel charge will arise. We will be seeing how we will be calculating this private fuel benefit. As we have seen, students, the private fuel benefit is totally different. If the employer provides a driver, or driver means the benefit is also additional benefit. It will not be included in the car benefit. But one when more than one car is made available simultaneously to an employee, the benefit in respect of second car is computed in exactly the same manner as set out below. So if my employer is providing 2 or 3 cars, so on each car you will be calculating your taxable benefit. You will be calculating your taxable benefit on each car individually, separate. For car 1, separate, calculate the car benefit. Car 2, calculate the benefit separately. I hope these additional points are clear, student. The first point was, if an employee is changing the car, then he needs to calculate the taxable benefit for car 1 and the car which he has changed, because the car 1 will be having some different list price and different percentages, and if it is used for only 4 months or 6 months, it needs to be time apportioned. If you are changing the car for first 4 months, you are using some other car, and for the next 8 months you are using some other car, then you need to time apportion it. Now coming, only you need to calculate the taxable benefit for 4 months, and for car 2 taxable benefit for 8 months. Now coming, if we have a car and the car is unavailable due to some reasons like repair or some other maintenance, then whether you will apportion the car benefit or not. If certain rules are satisfied, we will be apportioning it. So the general rule, rule was, students, we need to apportion all the taxable benefit. But in case of car, we have some slighter extra rules. When coming to the case of car, the rule number 1 is the car must be available before and after, and the car must be available for at least 30 days. If the car is at least unavailable for 30 days continuously, then we can apportion the car benefit. Now coming, the car benefit includes all the running expenses. If an employer provides some additional benefits like insurance, road fund license and maintenance, these will not be included under the car benefit. These will be included in the car benefit, students, in the calculation of car benefit, and these will not be treated as an additional benefit. When coming to the fourth, if the employer provides a driver or that is chauffeur, then along with the car, then the driver benefit will be an additional benefit to the employee. And if the employer is providing private fuel for his private use, then if the employer is paying the fuel for the private use journey, then that also will give rise to a private fuel charge. This we will be dealing in a next slide. So this is totally a different charge, student. When more than one car is unavailable, when more than one car is made available simultaneously, the taxable benefits needs to be calculated in the same manner you have been calculating for other cars. For each car you need to calculate the taxable benefit, students. I hope this is clear. Now we have seen that we will be calculating the car benefit using this formula, that is list price into appropriate percentage, and we have seen the list price elements and the appropriate percentage less any contribution made by the employee for his private use. Now we will be solving some questions so that we get a good grip on this. Please do see these percentages. So we'll be starting with our question practice. Car, private fuel and van. Question number 1, student. X is provided with a petrol company car. Okay, X is an employee. He is provided with a company car with CO2 emission of 140 grams. So the CO2 emission, students, is 140 grams per kilometer. Identify the percentage to be used in calculating the taxable benefit arising on the provision of the company car. The taxable benefit in case of car comes into picture when the employee is using company's car. Here the company is providing the car to employee X. So explain the difference if the car was a diesel car with not meeting the RDE2 standard. The car was a diesel car meeting the RDE2 standard. So the car provided is a petrol car, students. So as the CO2 emission is excess of 55 grams to, so the CO2 emission is 140 grams per kilometer. So the appropriate percentage will be till 55 grams, student. It is, as it is a petrol car, as it is a petrol car, the appropriate percentage is 16 percentage till 55, and excess of 55 grams, for each 5 grams 1 percentage will increase. So what is the excess, student? The excess is 140 minus 55. 140 minus 55 is excess of 85 divided by 5. So an increase of 17 percentage. So the appropriate percentage will be, students, 16 plus 17, that is 33 percentage, and this is lower than the maximum percentage, that is maximum percentage was 37. This is lower, so we can use this percentage. I hope this is clear, student, how we will be calculating the appropriate percentages. Now we'll explain what is the difference if the car was a diesel car which did not meet the RDE2 standard. In case of diesel car not meeting RDE2 standards, then the percentage will be, to students, different. The addition will be of 4 percentage. So appropriate percentage till 55 grams it will be, students, whatever is the diesel car meeting RDE2 standard, same as petrol car, that is 16 plus 4 percentage, as this is not meeting the RDE2 standard, so it will be 20 percentage, students. Here this will not be provided, so we will be using this plus 4. And excess of 55, students, excess of 55 will be 140 minus 55, 85 divided by 5, 17 percentage. So this will give rise to the appropriate percentage of 37. This is within the maximum percentage limit, that is 37, as the maximum is also 37 and this is also 37, so we can use this. When coming to the case of diesel car meeting RDE2 standard, the appropriate percentage will be same as petrol car. So the appropriate percentage will be, students, 33 percentage. I hope by solving this question we have a good idea. Now we will be doing further questions so that we have a good grip on this topic, and this employment benefit topic is very important in case of cars. X is provided with a company car by his employer. So X is an employee. He is being provided with the company's car by his employer. So whenever the employee is provided with the company car, the car benefit comes into picture. The car has a carbon dioxide emission rate of 132 grams per kilometer, 187 grams per kilometer, 62 grams per kilometer and 53 grams per kilometer. Calculate the appropriate percentage using the car runs on a petrol or is a diesel car which does not meet the RDE2 standard. So we need to calculate the appropriate percentage for assuming whether it is a petrol car or diesel car which does not meet the RDE2 standard, student. So if the CO2 emission is 132 grams per kilometer, students, so in case of petrol car, this diesel car not meeting RDE2 standard students. I hope it is visible. No. In case of petrol car, the appropriate percentage will be, students, till 55 grams it is 55 gram petrol car 16 percentage, and excess of 55, students, excess of 55, for each 5 grams 1 percentage increase will be there in the CO2 in the appropriate percentages. So 132 minus 55, 132 minus 55, it is 77 divided by 5, students. So it will be divided by 5. So it will be 15.4 percentage, and in the case of this we will round down the percentage. We will round down the percentage to near whole number, to the near whole number. This is same the round down we have studied in the chapter number 2 under the head of child benefit. We used to calculate child benefit as 1% into child benefit into ANI minus the limit 50,000 divided by 100. So whatever percentage we used to get, that is whatever the answer ANI minus the limit divided by 100 into percentage, that percentage we need to round down. Round down means if it is 15.4, the nearest whole number is 15 percentage. In case of 15.9, students, what is the nearest whole number? It is 16. But we need not round up. We should not round up. If we do 16, student, this is wrong. This will be round up. This will be round up. We need to round down. So if we do round down, it will be 15 percentage. So if we do round down, it will be 15 percentage. I hope this is clear. Each and every time we need to round down the percentages, or other way also you can do. Or the CO2 emission of excess of 77 you have received, no student. This you need to round down to near 5 or 0, because this is divisible by 5. So the near, round down to near 5 or 0, like 77 means 75. If it is 89, it will not be 90, students. We need to round down. So round down, it will be 85. If it is 72, it will be 70. I hope this is clear. If you follow this way also, then your answer will be, students, here will be round down, will round down the excess, the CO2 emission. 77 means 75 divided by 5. This will give 15 percentage. Either you can round down the CO2 emission, or you can round down the percentage. I hope this is clear. The same rules apply what we have studied in the case of child benefit. The same rule of round down applies here. We should not round up. Whether it is 15.5, 15.7, we need to round down, that is 15 percentage. If it is exact 16, we'll be taking 16. If it is 15.9 also, will not consider as 16. I hope this is clear. Excuse me, this is clear, student. This is very important. You need to round down. If you take this as, in case of this, you take this as 16 percentage, then in your multiple choice question, you will lose whole of the marks. 2 marks will be lost, because the percentage here is 16. 16 plus 15 will be 16 plus 15 will be, student, 31. But we need to round down. If we round down, it will be students, it will be 31 percentage. But if we take here also 16, then it will be a problem. So 16 plus 16, it will be 32, but the answer is 31. So you need to round up. Now coming to the case of diesel car not meeting RDE2 standard. In case of diesel car not meeting the RDE2 standard, only the percentage increases of 4 percentage. So 55 grams, that is diesel car meeting RDE2 standard, same as petrol, 16 percentage plus 4, as this will not be provided in the exam. So till 55 grams, it will be 20 percentage. For excess, it will be 132 minus 55, is equal to 77 divided by 5, 15.4 percentage. We will round down. So round down means it will be 15 percentage. So the appropriate percentage is, students, 20 percentage plus 15 percentage. So this is 35%, which is below the maximum limit of 37. So this percentage we will be using. I hope this is clear, students. Now please do pause the video and please do try yourself the appropriate percentage for carbon emission on for these three carbon emission. I will be solving. Please do pause the video and please do try yourself so that you have a good grip on this topic. So the second case is 187. 187 grams per kilometer. So it is a petrol car. First case, it is a petrol car. So 55 grams it will be, students, 16 percentage, and excess of 55 grams, that is 187 minus 55, we will be getting the figure of 132. Now I will round down here the CO2 emission. So I need to round down to near to 5 or 0, whichever is near. So near is 130 divided by 5. 130 divided by 5 is, students, 26 percentage. So our percentage will be, appropriate percentage will be, students, 16 percentage plus 26 percentage. This is 42 percentage, students, and this is more than the maximum limit of 37 percentage. So the maximum appropriate percentage we can use, student, is 37 percentage. I hope this is clear. Now for the diesel car. If any of the student who is intelligent and little bit applies their common sense, no, student, for diesel car, what was the difference? Only 4 percentage extra. If you do here 42 plus 4, you will be getting your answer, that is 46%, but the maximum is 37. So we'll be trying this in this way also. So we'll see our answer matches or not. It's simple, it will match, students. See, so 187 grams per kilometer. So for diesel cars not meeting RDE2 standards, so it will be, students, till 55 grams it will be 16 percentage plus 4 percentage, that is 20 grams, 20 percentage, 55 grams, and excess of 55 grams, students, that is 187 minus 55 divided by 5. So this will be 26.4 percentage, and we need to round down it will be 26 percentage. So 20 plus 26 will be, students, 46. So but the appropriate percentage maximum is 37, so this will not consider. So see, if we added 4 to this, we got the same answer. I hope this is clear, students. Now coming to the case number 3. Case number 3. The case number 3, students, here is 62 grams. 62 grams, and the case number 4 is 53 grams per kilometer. So the third case was, students, 62 grams. So petrol car, diesel car not meeting RDE2 standards. So 55 grams, it is more than 55 grams, so till 55 grams it will be 16 percentage, and excess of 55 grams it is 1.4 percentage. Will round down to nearest whole number, that is 1 percentage. So our appropriate percentage will be, students, 16 percentage plus 1 percentage, that will be 17 percentage. Now when coming to diesel car, if you add 4 percentage, 21% will be your answer. We will be seeing now. So petrol car not meeting RDE2 standards 50. Total 55 grams. Till 55 grams it was 16% plus 4% in excess for the diesel car not meeting the RDE2 standard. So 20 grams. See students, here directly it will be 20 or 16 plus 4. I hope this is clear. Then excess of 55. 1.4%, so it will round down to 1%, so the answer will be 21%. This is matching C students. So in case of petrol car it will be, in case of petrol car it will be 17%, in case of diesel car 21%. Now coming to the fourth CO2 emission, the fourth was students 53 grams. So 53 grams, this is within the range of 51 to 54. So petrol car, the percentage will be students 15%. And in case of diesel car, it will be plus 4 of the diesel car not meeting RDE2 standard. So it is not meeting. So for meeting it will be 15%, same as petrol car, plus 4%, that is 19%. I hope this is clear students, within the range of this. So now we will be solving a further question. Now we will be seeing how to calculate the total car benefit. This we have seen how to calculate the appropriate percentage. Now coming to the case of car benefit. During the tax year 23-24, Fashionable PLC provided the following employees with car benefit. With company's car. If company's car is provided, then car benefit comes into picture student. Then car benefit comes into picture. First case, first employee. N was provided with a diesel car. Okay, N is an employee of Fashion PLC. Was provided with diesel car. Excuse me. Meeting the RDE2 standards. So, meeting RDE2 standards on 6th August 2023. When it was given students, it was given on 6th August. The car had a list price of 13,500, but Fashion PLC secured a discount and paid 12,500. The car has a CO2 emission of students 107 grams per kilometer. So the list price is student 13,500. Will not consider the amount which is paid. The actual amount paid is irrelevant. It is not relevant. And the list price will not contain any discount. So we'll take the list price at 13,500. Now we need to calculate the car benefit because N is an employee and is provided with the company car. So taxable benefit will come into picture. So car benefit is calculated as list price into appropriate percentage less employee's contribution employees contribution. This will give rise to our taxable benefit students. I hope this is clear. Now in case of N, the list price is 13,500 into appropriate percentage. The appropriate percentage will be students, appropriate percentage will be 107 grams and it is diesel car meeting RDE2 standard, same as the percentage of petrol car will be applicable here. 55 grams, it will be 16% and excess students 107 minus 55 grams divided by 5 10.4%. So we'll round down, so it will be 10%. So our appropriate percentage is 16% plus 10%, that is 26%, which is lower than 37. So into 26%, there is no contribution made by the employee. So the taxable benefit will be students 13,500 into 26%, that will be 3,510. Now we have taken this, we have got the taxable. But one student, the general point says any contribution made by the employee needs to be reduced, no contribution. And the second general rule was a portion if it is available for part of the year. And when was the car available to the employee? N on 6th August. So August, September, October, November, December, January, February, March, the car was only available for 8 months. So the taxable benefit needs to be a portion. So our taxable benefit will be, students, into 8 divided by 12, that is 2340 is our taxable benefit. I hope this is clear, students. This is clear. The taxable benefit for N is 2340 as the car was only provided for part of the year. Now B. B was provided with a diesel company car. Okay, B is an employee. So coming to the case number 2, B is an employee provided with diesel car. Diesel company car throughout the tax year, so no need to apportion. The car does not meet RDE2 standards. The list price of the car is 16,400 and the official rate of and the official CO2 emission rate is 137 grams, students. So B is an employee, diesel car, not meeting RDE2 standards. The list price was 16,400 pounds and the CO2 emission was 137 grams per kilometer. So in case of diesel car not meeting RDE2 standard, we have 4% addition. So car benefit, that is list price into appropriate percentage less employee contribution will give rise to a taxable benefit. So the list price is, student, 16,400 into appropriate percentage. The appropriate percentage is for 55 grams, it will be same as the petrol plus 4, 16 percentage plus 4, that is 20, or directly you can write 20%. And for excess, that is 137 grams minus 55 will be 82, and the nearest 5 or 0, whichever is the nearest, the nearest is 0. 80 divided by 5, so this will be 16 percentage. So our appropriate percentage will be, students, our appropriate percentage will be 20 percentage plus 16 percentage, that is 36 percentage, which is not more than 37. So our appropriate percentage will be 36 percentage. This will give rise to an employment benefit. Any employee's contribution? No. So taxable benefit will be 16,400 into 36 percentage, that is 5904. We need to apportion it? No, students, because it is provided for throughout the tax year. Now coming to the third employee, that is A. A was provided with a new petrol car throughout the tax year, so no need to apportion. It is a petrol car. It is provided by the company, so taxable benefit rises in case of, so taxable benefit rises for the car. So we need to calculate the car benefit. A was required to contribute 3,000 towards the purchase. So this is, student, the capital contribution. This is different from the contribution made by the employer towards the private use of the car, the private use or the running cost which he has paid, the benefit which he have received for his private use. This is totally different. The capital contribution totally different, and the contribution which the employee does for the private use of the car. The car had a list price of 22,600. Official CO2 emission was 214 grams per kilometer. A paid the company 1,200 pounds during the tax year for 23-24 for the private use of the car. I hope this is clear. Now moving to the third employee, A. So the list price was, students, 22,600 pounds. CO2 emission was, students, 214 grams per kilometer, and the capital contribution was 3,000, which is lower than 5,000. So we can totally reduced from the list price. The capital contribution will reduce from the list price, but the employee's contribution of 1200 will reduce from the taxable benefit of the car. So I hope this is clear. So car benefit is list price into appropriate percentage less employee contribution gives rise to taxable benefit. So the list price is 22,600. The appropriate percentage will be, students, for 55 grams it will be 16, as it is a petrol car, and excess of 55 grams. For each 5 grams, 1% increase, students. 1% increase, 159. This will round down to nearest 5 or 0. The nearest 5, or round down, not round up. 155 divided by 5, 31%. So our AP will be, appropriate percentage will be, students, 31 plus 16%, that is 47. This is more than 37, so we will not be considering this. We will be considering the 37%. I hope this is clear, students. So the appropriate percentage is 37. So 22,600 into 37%, 8,000. No, students. From the list price we will reduce the, we forgot to reduce the capital contribution of 3,000 to arrive at the list price, students. So the list price is 22,600 minus the capital contribution of 3,000. This will give rise to a figure of 19,600 into 37%. So our benefit will be, students, 7,252, and the employee's contribution is 1,200. So our taxable benefit will be 6,052. I hope this is clear, students. The maximum is 37 and the list price needs to be reduced by the capital contribution, and this capital contribution is totally different from the employee's contribution for the private use of the car. Capital contribution will be reduced from the list price. The employee's contribution will reduce from the benefit amount. Now coming to the case of fourth employee. So fourth employee, X was provided with a hybrid electric car. So in case of hybrid electric car, the appropriate percentage will be based on electric range, students, throughout the taxes. So no need to apportion it. The car had a list price of 60,000 pounds. The CO2 emission rate of 39 grams kilometer, and the electric range is 41 miles. Fashion PLC also paid for the road tax, insurance and maintenance on the car, which cost 1,600 during the tax year 22-23. Students, in the additional point we have learned that if an employer is providing, if the company is providing additional benefits like insurance, maintenance, road fund license, these will not be considered as an additional benefit because these are already included in the calculation of car benefit. See here, students, we have seen here, in case of electric car, hybrid car, CO2 will be based on, the percentage will be based on electric range, and the CO2 emission must be between 1 to 50 grams, and the car benefit takes into account all of the running expenses of the vehicle. So there is no additional benefit when the employer pays for insurance, road fund license and maintenance. I hope this is clear. Now coming to the case of X, the list price was, students, 60,000 pounds, and the CO2 emission was 40. The CO2 emission was 39 grams per kilometer, and the electric range was 41 miles, and the insurance, maintenance and road fund paid by the employer was 1,600 pounds. Now car benefit, as it is a hybrid car, will be based on the percentage will be based on the percentage will be based on students electric range. I hope this is clear. So list price is 60,000 pounds, students, into the percentage. The appropriate percentage is 41 miles, students. 40 miles is between this range, so 8 percentage. Any contribution? No. So the taxable benefit will be, students, 4,800. And this will give rise to additional benefit or no? No. In your note you should mention that there will be no tax, no additional benefit will arise, as these are already covered under car benefit. I hope this is clear, student. Now moving to the fifth employee. The fifth employee was Z. Z was provided with the electric company car throughout the tax year 23-24. So this is electric car. For electric car, the percentage was, students, 2%. And it was provided throughout the tax year. The CO2 emission is 0. The car had a list price of 17,000. Had a list price of 17,000. So list price is 17,000. The appropriate percentage is 2%. So car benefit will be, students, list price into appropriate percentage, appropriate less employee contribution, taxable benefit. So 17,000 into 2%. So our taxable benefits will be, students, our taxable benefit will be 340. So I hope the calculation of car benefit is clear, students. I hope this is clear, as we have solved this question. So we have done an ample question so that we have a better understanding. Now moving to the further topic, that is private fuel, and before that we'll be covering a small topic, that is pool car. I hope these all percentages are clear. For petrol car and diesel car not meeting, petrol car and diesel car meeting the RDE2 standard, it is 15 and 16%. If it is between the range of 51 to 54, 15%. 55 grams, it is 16%. 51 to 54 grams, 19%, and 55 grams, 20%. And for excess above 55 grams, for each 5 grams there will be an increase of 1%. So the maximum will be 37%. In case of electric car, the percentage is 2, and in case of hybrid electric cars, the appropriate percentage will be based on the electric range. And we had seen the 6 points. I hope this is clear. Now moving to the further topic, that is pool car. In case of pool car means where 1 or 2 employees are using the same car, where pool means a pool of people are using that car, a pool of employees are using that car. So if a pool car is used, there is no taxable benefit if the car provided is a pool car. If the car provided is a pool car, then the taxable benefit will be, students, 0. No taxable benefit. So how we will decide whether the car is a pool car or not? So there are conditions which needs to be satisfied in order the car to be a pool car. To qualify as a pool car, all of the following conditions must be met during the tax year in the question. The car must be used by more than one employee. Pool car means it must be used more than one employee, and not usually by one employee to the exclusion of the others. It was not wholly used by one person, like A is using 95% and B only is using 5%. It was not exclusively used by one person. All the employees must use it. If the car is a pool car, then no taxable benefit. How we will decide whether it is a pool car? To satisfy the car to be a pool car, the condition needs to be satisfied. The three conditions. First condition is that it must be used by more than one employee. It must not normally be kept overnight at or near the residence of any of the employees making use of it. If the car is used by 2 to 3 employees, 3 or 4 employees, this car should not be kept overnight at any of these employees' residence. Should not be kept overnight at or near the residence of any of the employee. And any private use must be merely incidental to the employee's business use. There must not be any private use. There should only be employment use. There should only be employment use. Private use, then it will not classify as a pool car. Then normal car benefit will be applicable. I hope this is clear, students. In case of car, if the car is a pool car, then the taxable benefit will be zero. No taxable benefit. No taxable benefit. How we will decide whether the car is a pool car? Three conditions needs to be satisfied. Condition number 1, used by more employee. Condition number 2, the car must not be kept at or near the residence of any of the employee who is using the car. And the third case is that no private use must be there. If it is used for employment purpose, it is okay. Then it is a pool car. If it is used for private use, then it will not classify as a pool car. Now moving to the next topic, that is private fuel. Now students, the private fuel, when does the private fuel comes into picture? The private fuel comes into picture. The private fuel comes into picture when, students? The private fuel comes into picture when car is provided by the employer. Car is provided. Along with the car, the employer also, the company pays the fuel amount for your private use. At that time, the private fuel comes into picture. And private fuel, for private fuel, as we have seen in the additional point, that a separate benefit charge is made for private fuel. For private fuel, we'll be seeing a different charge. So private fuel will be applicable. Private fuel charge will become applicable when car is provided. Along with the car, the employer is paying me fuel amount for my private use. So how we will be calculating the taxable benefit amount, we will be seeing further. In addition to the provision of the company car, some employees also have all or part of their fuel for private mileage paid by their employer. If they are using for some business purpose and for employment purpose, and the rest they are using for private purpose. In that case, how we will be calculating the taxable benefit amount? We will be seeing, student, now. So one thing you need to keep in mind, that the private fuel only comes into picture when the car is also provided. If car benefit is there, private fuel benefit also will come into picture. And this is totally different from car benefit. Car benefit is totally different. Fuel benefit is totally different. Private fuel benefit is totally different. Do not mix these both. This is an entirely separate benefit from the provision of the car, and the rules are as follows. The benefit where the fuel is provided for private motoring in a car provided by a reason of a person's employment is also based on the CO2 emission of the car. So how will be calculating the fuel benefit? The fuel benefit will be calculated based on the percentage of the CO2 emission. The same percentage we have used in the car benefit, the same percentage will be applying here also. This percentage will be applied on what figure? On which figure? The figure is base figure. The fuel benefit will be calculated, student, as the fuel benefit is calculated as base figure into appropriate percentage. Base figure into appropriate percentage. Base figure into appropriate. The base figure for the tax year 23-24 is 27,800. You will take this figure and you directly apply the appropriate percentage. This percentage is same as in the case of car benefit. So how we will be calculating this, students? The fuel benefit is calculated on a base figure into appropriate percentage. Base figure, what is the base figure? Base figure क्या है? Base figure है 27,800. and this figure will be provided in the tax rate sheet, students. This will be provided in the tax rate sheet. The CO2 percentage used in the calculation of car benefit is also used to calculate the fuel benefit charge. In case of private fuel benefit, we'll be calculating the fuel benefit charge. How we'll be calculating is base figure into appropriate percentage. Base figure is 27,800 into appropriate percentage. No benefit is charged in relation to any electricity provided for an electric or hybrid car. So fuel is provided for petrol and diesel car, but if electricity is provided for a hybrid car and electric car, then there is no charge on, there is no benefit, there is no taxable benefit for the electricity which is provided by the employer. By it is if the employer is also providing you electricity for charging the electric car, in both the cases, in hybrid car and also electric car, so no benefit is charged in relation to an electricity provided for an electric car or hybrid electric car, students. I hope this is clear. I hope the point of how we'll calculate the fuel benefit, the fuel benefit will calculate on the base figure into appropriate percentage. Base figure is 27,800. Now moving to the next slide. Fuel provided for part of the tax year. If the employer is providing me fuel for part of the tax year, only for 6 months or 8 months, or is providing for whole 12 months, but in between 2 months is not providing, we'll see how to deal with this. Whether we need to apportion or not. Now in this slide, we'll be studying the two general rules, that is time apportion of the taxable benefit and whether we'll reduce the contribution made by the employee. So coming to the time apportion, it is not possible to opt in and out of the fuel benefit charge. If, for example, fuel is provided from 6th April to 30th September, then the fuel benefit for the tax year is only charged for 6 months, because the fuel benefit is only provided for me 6 months till 30th September. So it will be permanent. After this period, my employer will not provide me. After this period, my employer will not provide me any benefit. So we need to apportion. So the taxable benefit, the fuel benefit will be only for 6 months. This is the case of permanent cessation. Permanently seized. The fuel benefit is permanently seized. If the fuel is provided from 6th April to 30th September 2023 and then again from 1st Jan to 5th April 2024, the fuel benefit is not reduced since the cessation was temporary. Okay, from this we understood that it is permanent cessation, then we'll apportion. If it is temporary cessation, no apportion. So clear with this, students? If it is temporary cessation, then no need to apportion the fuel benefit, that is 27,800 into appropriate percentage. Then if it is permanent cessation, we'll be calculating the apportionment, only the taxable benefit which is provided for the part of the year. If it is temporary cessation, then we'll take whole amount, will not apportion as per the part of the year which it is provided. I hope this is clear, students. Now coming to the next point. This point is very key, students. This point, if you understand, the whole private fuel will be clear picture. Let me give an example. 3 examples I'll be giving, students. If I am using the company car, I am the UK employee using company car for employment purpose, then whatever the amount the employee pays me, will not give rise to any taxable benefit, because it is for the purpose of employment purpose. Private fuel comes into picture when the employer pays the fuel amount for the private usage. This is for employment usage, so it will not come into picture. Now coming to the second case, students. Case number 2. I am a UK employee. I use the car for my private usage, and for this private usage the company paid for the fuel £1000. And so if they paid me £1000, then what I'll calculate? Fuel benefit will come into picture, the private usage, private fuel benefit. So we'll calculate the fuel benefit charge. How we'll be calculating it? 27,800 into appropriate percentage. And if it is temporary cessation, will not apportion. Permanent cessation will apportion it. But as I am the employee, I pay back to my employer. This is employee's contribution. General rule, remember the general rule, employee's contribution towards the cost of the benefit which is provided by the employer. So if I pay back to the £1000, so my effect will be 0. So my taxable benefit will be, student, 0. Now coming to the case number 3. This is very important. If you understood this point will be very clear. I am a UK employee. I used the car, the company provided me the car and also paid for my private use of, the employer paid me £1000 for private fuel. He paid me fuel amount which I used for private use. I hope this is clear. So we'll calculate the fuel benefit charge on this. But if the employee, as I am the employee, I pay back to my employer only partial amount, that is £500. In that case, this is the employee's contribution to, so this will reduce the taxable benefit. But only this is the case in the whole chapter, this will not reduce. The general rule what we saw, students, taxable benefit will be reduced by the employee's contribution. But here in case of private fuel, whatever is the amount the employee is paying to the employer, if the amount paid is partial, if whole amount is not paid, now the private use paid by the employer is 1000 and I only paid, and I employee only paid 500, but the amount was 1000. So this 500 will not be reduced from the taxable benefit. So the taxable benefit will be calculated on the base figure of 27,800 into appropriate percentage. I hope this is clear, student. No reduction is made to the fuel benefit for payments made by the employee. This is employee's contribution, unless whatever the employee pays towards the contribution of the cost which is incurred by the employee will not be reduced in case of only private fuel. Unless, when it will be reduced? Unless the employee pays all fuel used for private motoring. Whatever is the private amount he used, whatever the cost which was incurred for the private use, if he pays back the private use amount, then the private fuel will not come into picture. Then in that case there would be no fuel benefit. Then there will be no fuel benefit, because I have already paid my whole amount. 1000 my employer is paying for my private use fuel. Again I am paying back 1000. So no. If I reimburse partial amount, then we'll come to calculate the fuel benefit charge. And whatever the amount the employee pays to the employer will not be reduced unless and until it must be the whole amount. No reduction is made to the fuel benefit for payments made by the employee. So reduction will not be made. The amount which is paid by the employee, no reduction will be made, unless the reduction can only be made if the amount of the private use, the whole private use fuel amount is provided to the employer. Whatever the employee incurs the private use fuel amount, the whole amount he gives back to the employer, then no fuel benefit will come, because you have already paid the whole amount. So the fuel benefit only applies to vehicles for which there is a car benefit. Student. As previously mentioned by me, private fuel only comes into picture when the company provides you car also and fuel for private use. If you reimburse the private amount, whatever the employer pay you, the private use amount, if you return the whole amount, then no benefit will come into charge. If you reimburse partial amount, then fuel benefit will come, but the partial amount cannot be reduced. This is only the case in the exam paper where you can't reduce the amount, dear students. But the fuel benefit will not apply to, the fuel benefit does not apply to pool car and employee's own car. Employee's own car, we have seen, employee's own car will be doing the Statutory approved mileage allowances, whatever is the amount that the employer paid minus the approved mileage allowances. If it is excess, will be employment income. If it is there is a difference, will reduce from the allowable deduction. We have already covered in a previous class. So fuel benefit only applies if car is provided by the employer and private fuel is provided, and fuel benefit will not applicable is not applicable to pool car and or employees own car. I hope this is clear, student. So now, before moving to the next topic, we will be doing some questions. Private fuel benefit. Question number 4. Continuing with the situation set out in illustration 7, that is fashionable PLC. So this question, which we have already covered, students, here, which we have already covered, this one, the appropriate percentage we have calculated. These percentage will be useful to calculate. So continuing with the situation set out in illustration 7, fashionable PLC. N was provided with fuel for private use between 6th August 23 and 5th April 2024. So when does the private fuel come into picture? Private fuel comes into picture when car benefit is there. So in case of N, car benefit charge was there and car benefit charge was there and private fuel is provided here. So how will be calculating, students, here the the benefit? The benefit will be, so the base figure into appropriate percentage. So base figure is 27,800 into, so the appropriate percentage in case of N was, students, in case of N it was, I hope, please do see here, students, see here, it was 26. In case of N employee, it was 26, students. It was 26 into 26. So this will give rise to the fuel benefit charge. Taxable benefit is 27,800 into 26 percentage, that is 7,228, and it was only provided between 6th August to 5th April. So it was only provided for part of the year. Here there is no permanent cessation or temporary. This is only a portion. It was provided after 6th April. So it was only for 6th August. August, September, October, November, December, January, February, March. So 8 months into so our fuel benefit will be, students, 4819. I hope this is clear. Now please do pause the video and try yourself, students, the base figure into AP here also. B was provided with the fuel for private use between 6th April and 31st December. So only till 31st December. So 27,800 into what was the percentage for B, students? It was 36%. Please do refer the previous question answer. So our taxable benefit will be, students, 27,800 into 36%, that is 10,008 into April, May, June, July, August, September, October, November, December, only for 9 months, into 9 divided by 12. Please do not confuse with the permanent temporary cessation and only if it is provided for part of the year. A was provided with a fuel for private use between 6th April 2023 and 5th April. It was for throughout the tax year. He had Fashion PLC. He paid Fashion PLC 600 during the tax year towards the cost of private fuel. Although the actual cost was, students, £1,000. It was £1,000, but he has only paid £600. If A would have paid £1,000, then no fuel benefit would come into picture. But he only paid here, students. But he only paid here 600. So this is only the area in this chapter where whatever the employee does the contribution will not reduce the taxable benefit. We'll calculate the fuel benefit on the base figure. So what is the base figure, students? The base figure into AP, 27,800 into 37%. So this will give rise to an income of students 10,286 and will not reduce this 600. Why students? You need to mention 600 will not be reduced because it will only be reduced if the whole amount is paid and there will be no fuel benefit. X was provided with the fuel for private use throughout the tax year. So X had a hybrid car. See here students. So X had a hybrid car. So electric hybrid car. So and we had seen what is the percentage students here for hybrid car. It was 8%. It was 8%. And they are provided with fuel because it is hybrid car, both fuel and electricity. But in case of electricity, there will not be no private charge on electricity, only on fuel. So the base figure is into appropriate percentage, 27,800 into 8%, 2,224. I hope this is also clear student. Now Z was not provided with fuel for private use. So Z was not provided because why was Z was not provided? Because it was electric car and electric car will not use any fuel, no fuel. So no fuel, no private fuel charge will be applicable. I hope this is clear student. I hope this question is clear. Please do try yourself also this question so that you have a good grip on this topic. Now moving to the next topic, that is private use of an asset provided by the employer. Before that, we will be covering the benefit for van. In case of van, the benefit rules for vans are different from those of cars. Yes, the taxable benefit for the private use of a van for the tax year 23-24 is a flat rate scale of charge of 3,960. So under the case of van, we will not be seeing what are the CO2 emissions, what is the mileage, whether if it is electric or whether we will not be seeing that. In case of petrol and diesel vans, there is a straight taxable benefit of, that is, it is a charge, because charge means we need to calculate the income tax. So our taxable benefit will be students a straight flat charge of 3,960. Vans producing zero CO2 emissions, zero emission vans have zero benefit charge. But in a case of car, it was 2%. But in case of van, it is zero. In case of van, it is zero, student. In case of van, it is zero. So for van, 3,960 is the flat charge if we are using van. But if it is zero CO2 emission, no charge. No benefit arises when we will not calculate the benefit. No benefit arises where the private use of van is insignificant. We are using the van for very insignificant. We are not using the van too much. When determining the level of private use, journey between home and work are ignored. If home and work means students, home to workplace, it is ordinary commuting. So for ordinary commuting, if we are using the van, the taxable benefit will be unavailable. It will be ignored. It will be zero. This is not in the case of car. In the case of car, it will not be this. Will be calculating the benefit. I hope this is clear, student. When determining the level of private use, journeys between home and work are ignored. This is not in the case of car. This is not in the case of car. In case of car, we have seen in a previous that whatever we are using and whatever the amount is being reimbursed, if it is for private purpose, we are not able to deduct it. Those rules are very different. In case of van, we are not allowed and the ordinary commuting journey is ignored. Apportionate reductions are made when the van is unavailable. Use the same definition, unavailable, as for cars. So when will be apportioning or proportioning the taxable benefit for van? The same rules for car. That is, the van must be available before and after, and if it is available for at least 30 continuous days, then we will be apportioning or proportioning the benefit. I hope that the car benefit and the van benefit, when will be apportioning it? It will be apportioned when the car or the van is available before and after, and the car or van is unavailable for at least 30 days continuously. And one more, student do not confuse between this and the it was available for part of the year. Part of the year you will apply, but if from 6th April to 31st December only, then you will calculate for this month. For this period only, benefit will be apportioned. Where employees share the private use of the van, the scale charge is divided between the employees on a just and reasonable basis. If the van is used by 2 or 3 employees, then it will be divided by reference to the amount of private use. In addition, a taxable benefit of 757 rises where van fuel is provided for private mileages. As in car benefit, we had fuel, private fuel, we were calculating the fuel benefit charge on base figure into appropriate percentage. But when coming to van benefit will be 3,960 students. But if fuel is also provided and we are using the van for private use and the fuel is used for private use, then the benefit will be a flat rate of 757. There is no fuel benefit for a company where which produces zero CO2 emission, students, zero CO2 emissions. So I hope in case of van, how we'll be calculating the benefit is clear, students. And these both figures will be provided in the tax rate sheet, students. Tax rate sheet. So the van benefit will be a flat rate charge of 3,960. Van benefit will only be apportioned if van is available before and after, and at least 30 days it was unavailable. And if it is van fuel is provided for private use, the benefit will be 757. Now moving to the next type of benefit, that is assets provided to employee. Employer or the company provides assets for private use. Private use of an asset by the employer. Private use of an asset provided by the employer. So employer is providing me some assets, and as I am the employee, I am using those assets for my private use. So now we will be studying how we will be calculating the taxable benefit in the case of assets which are provided to the employees. Private use of an assets provided by the employer. The general rule that applies to the provision of the asset other than car, van and accommodation. So this private use will not apply to car, van and accommodation, because in case of car, van and accommodation we have seen totally different rules. These three topics had their own special rules. Is that an employee is taxed on an annual benefit of. The general rule that applies to the general provision that applies to assets other than car, van and accommodation is that an employee is taxed on an annual benefit of 20% of an asset's market value at the time it was first provided. It was first made available. It was first provided to the employee. So in this case, what is the difference, students? In this case, the taxable benefit will be calculated as 20% of the market value when it was provided to the employee, first provided to the employee. And where the employer, if the employer does not own, where the employer rents the asset made available to the employee instead of buying it, the employee is taxed on higher of. Higher of means 2%. Higher of two things: rent paid by the employer or 20% of the market value. If the asset is owned, we'll calculate at 20% of the market value when it is first provided to the employee. When coming where the employer rents it out, so we'll take the taxable benefits as higher of two things, that is 20% of market value or rent paid by the employer. The provision of one mobile phone to an employee is exempt. If employer is providing employee one mobile phone, it is exempt. If they are providing two mobile phones, for first mobile phone 1, mobile phone 2, for first mobile phone private use, it is exempt. It is an exempt benefit, student. We'll be covering this in our exempt benefit rules also. When coming to phone number 2, we'll be calculating the private use. Clear with this, students? These rules do not apply to car, vans and living accommodation, as we have already seen special rules applying to the provision of these assets. So the private use will not apply to car, van and private living accommodation. And the two general rules, that is, whatever is the contribution made by the employee will reduce the taxable benefit, and time apportion, if it is only the taxable benefit is only available for part of the taxes. I hope this topic is clear. If an asset is provided by the employer to his employee for private use, taxable benefit we need to calculate. How we will calculate the taxable benefit, students? We will be calculating the taxable benefit like market value when first provided to the employee into 20%. If it was rented by the employer, then the taxable benefit will be higher of two things: higher of rent paid by the employer or 20% of the market value. And the provision for first mobile phone is exempt. For second phone, will calculate the taxable benefit. And the assets provided for private use will not be applicable to car, van and living accommodation, students. I hope this is clear. Now we will be solving a question so that we have a good understanding. Private use of an asset provided by the employer. Question number 5. X is provided with a computer by her employee solely for private use, which cost £800. Calculate the annual taxable benefit arising from on the employee. So the benefit will be, students, the benefit will be 20% of the market value. That is 20% of 800, 160 taxable benefit, because here we have purchased and provided. Now the second case is, student, the second case is, what if the employer rents the computer? In case of rent, the taxable benefit will be, students, higher of two things: higher of rent paid by employer, that is 200, and 20% of market value, that is 160. So higher of this is 200. So the taxable benefit is, if it is rented, the taxable benefit will be, students, 200. I hope this is clear, and thus you need to learn 20%. This will not be provided in the examination tax rate and sheet. Now moving to the gifts of the asset. If an asset is gifted, gift of an asset. If an asset is gifted, then the taxable benefit arises because it is a benefit for the employee. So gift of an asset means I am receiving a gift from my employer, or if I am an employee, I pay the market value of some asset is £100 and I only pay £20. So this is also a type of gift. So if employee is also paying lower amount, this is also a type of gift on insurance. We'll be seeing in questions how we'll be solving this. Now coming to the case of gift will also give rise to the taxable benefit, and we will be seeing how we will be calculating the taxable benefit amount. If an employer purchases a new asset and gives it to an employee immediately, my employer purchases an asset, directly gives to me. So what will be my benefit? What will be my taxable benefit? General rule. What does the general rule say, students? General rule says whatever the cost the employer incurred to provide the benefit to the employee will be the taxable benefit. Same here also. If an employer purchases a new asset and gives it to an employee, immediately the employee is taxed on the cost to the employer. Whatever was the cost to the employer, On that amount we will be calculating the tax, and that amount will be the taxable benefit for the employee. And please do remember students, the two general rules: if there is any employee contribution, you will reduce. Here also assets provided and apportion, and here also will be applying those rules. Now coming the second case, this was when employer purchases new asset and immediately gives to the employee. So the taxable benefit will be the cost that the employer paid, will be the taxable benefit to the employee. But private use, first we have used the asset for private use. I use the asset private use, then followed by a gift of the asset. If there is a private use and following that private use there is a gift of that asset, where an asset is used by an employee and then subsequently given to that employee, means asset is privately used by that employee and it was subsequently given to that employee as a gift. The taxable benefit that the employee is taxed is on higher of two things. So the first case was very easy. Whatever is the cost, if employer purchase new asset, gives to the employee whatever is the cost to the employer. But if there is private use, then there is the gift of that asset, then the taxable benefit will be, students, higher of two things. What is higher of two things? First and second. The first one is assets market value when it was gifted. What is the asset market value when it was gifted? And the second case, assets market value when first made available to the employee, when first made available to any employee. Employee gifted me, but before that some other employee used it. So when it was provided to that employee, we need to take that market value less all benefits taxed on the employee during the time the employee had the use of it, but did not own it, and this will give rise to the, and from these two amount, higher of whichever is the higher will give rise to taxable benefit, and less the employee's contribution. This is the general rule, students. This is the general rule. Whatever the employee has given contribution, you will be reducing it. So gift of asset, if the employer purchases a new gift and gives to the employee, whatever the cost the employer incurs will be the cost to the students, will be the cost of the employer, will be the taxable benefit to the employee. But where is the private use following the gift of the asset, then the taxable benefit will be higher of two things. First one is the asset's market value, or asset when first made available to the employee, less all benefits, that is private use benefit, that is 20% of the market value. Till what date it was the benefits have been taxed, we will be getting that figure, and from 1 and 2 we will be selecting the higher amount, and that amount, if any contribution is there, will reduce. If not, that will be a taxable benefit that will be under the head of employment income and will be taxed. The purpose of the special rule for gift of used asset is to prevent employees gaining from gifts of asset that depreciated in value rapidly once they were used. So why the special rule applies for private use following the gift? Because the asset has been used by some other employee or by me. As we use the asset gets depreciated, the value of the asset comes down. So by this way we will be getting the real value of the asset. I hope this is clear, student. Why we are following the special rule? Special rule is followed because the asset gets depreciated and the value also get depreciated, and the use of that asset when compared to the first use and when compared to after using the asset, after some time the usage capacity will be different. Now this gift of assets will not apply to certain cases where the asset being given to an employee is used car, van or bicycle. Now I privately used, in case of car, van and bicycles, I privately used it. We have seen the special rule for this. And after private use, your employer gifts you the car, van or bicycle. In that case, this rule will not apply. The private usage rule will not apply, students. This private usage rule will not apply. So what will be the taxable benefit in case of car, van and bicycle, which are privately used by the employee, and after that they are gifted, in that case the taxable benefit will be, students, market value at the date of transfer. Whatever is the market value, that is assets market value when gifted. You need not consider this one. In case of car, van and bicycle, if you're privately using it first, which is provided by your employer to the employee to use for private purpose, then they are gifting you. In that case, you will not be using the private use and following the gift rule, that is higher of assets market value when gifted and assets when first made available less all benefits which have been taxed till now. In that case, this will not be applicable, only will be taking the market value when gifted. And the two general rule also will apply, students, less the employee's contribution and appropriate apportionment. So now we will be doing a question so that we have a good understanding. Gift of an asset. Question number 6. X employer, X is an employee, X is employee, X limited is employer. X limited, X employer, X limited purchased a dishwasher for his use on 1st June 2022 costing £600. Okay. X employer, X limited purchased a dishwasher for his use, for X use. On 6th April 2023, X limited gave the dishwasher to X, its market value then being 150. Calculate the benefit assessable on X for the gift of dishwasher in the tax year 23-24. A. What would the assessable benefit be if X had paid X limited £100 for the dishwasher? So they are providing some asset for private use. For private use, how will be calculating, students? The private use benefit will be, first we are using privately and it was given on 6th April, but we are using on from 1st June. So from 1st June we are using it. For the tax year 23-24, what it will be? It will be a gift of dishwasher. But in 22-23 it will be asset provided for private use. So gift of asset means private use is that, then gift is that. So higher of two things. First one is annual value or market value of the asset on the gift date. So on that day the value was, students, 150, market value being 150 on 6th April. Now coming to the second, market value when made first available, that is £600 less all taxable benefits charged on employee. So from June, July, August, September, October, November, December, January, February, March, for 10 months we are using it. So 600 into 20%. This was the private use, students. This is the private use, into 10 divided by 12. So this will be, students, 600 minus 100. So it will be 500. So higher of, what is higher of, students? 500 will be our taxable benefit, because first private use is there, then gift is there. So how will we calculate the taxable benefit? Higher of asset when it is provided to the gifted on the gift date, or market value when it was first made available, less all benefits, that is all private use benefit which has been charged on the employee. Now moving to the second question, what would the assessable benefit if X had paid £100? So if X had paid £100 means X paid. So X paid is an contribution by employee contribution. So that is, students, so taxable benefit is 500 less X's contribution of 100. So our benefit will be, students, 400. I hope this is clear. The case of gift and asset for private use. Now moving to the last question of today's session. Question number 7. A suit costing 300 was purchased for, a suit costing £300 was purchased for X. So X is employee, students, by her employer on 6th April 2022. On 6th August 2023, the suit was purchased by X at 14 pounds when the market value was 30 pounds. Okay, students, first a suit is purchased for X for by her employer for his use. But on 6th August 2023, X purchased the suit at the 14 pounds. So this is an contribution, employee's contribution, but the market value was, students, 30 pounds. So this is also a gift. As earlier mentioned by me, if the X is purchasing that asset at a lower value, this is also will be a type of gift only, because X will be contributing some amount, but it is gifted to employee. So calculate the benefits assessable on X for each of the tax years affected by the above information. So for the above information for the tax year, in 6th April 22-23, it was gifted. So for 22-23, it was not gifted, it was private use. It was gifted on 6th August, it was purchased and employee paid a minimal amount. So in the tax year of 22-23, it will be private use. So students, private use will be based on the market value into 20%. If it is rented by the employer, then it will be 20% of the market value, or rent paid by the employer, whichever is higher in case of assets provided for private use. So here the market value was 300 when it was purchased. At that time only it was given. So it is 60. So our taxable benefit for 22-23 is 60. Now coming to the case of 23-24. It was gifted on 6th August. So from 6th April to 6th August, it will be private use, students. Please do keep in mind. See here, when it is, dates are very important. April, May, June, July. 4 months it was private use. Market value into 20%, that is 300 when first made available to the employee. That date market value will be taken. See here, students. Market value at the time it was first provided into 20% into 4. Only for 4 months it was privately used. So our benefit will be 60 into 4 divided by 12. This will be, students, 20. Now, so this is the private use taxable benefit. But now in case of gift, why we are considering gift, student? Because he has paid a minimal amount. X has paid a minimal. So in case of gift, that is a private use. It is not like that the asset is immediately purchased. The employer purchases a new asset and gives to the employee. In that case, the taxable benefit will be the cost of the employer. But in her case, it is private use following the gift. And private use will not be applicable for car, van and bicycles. Rather, the market value on the date of gift will be taken. So gift, higher of two things: market value when gifted. So market value, what was, student, the market value? The market value was 30. See here, on 6th August it was 30. Now coming to assets when first made available. So when first made available, what was the market value, students? It was 300 less all benefits charged on the employee. So this was, in previous year it was, students, 60, and this year it is 20. So 60 plus 20, 80. So our taxable benefit, so this amount will be 220. So higher of these two amounts are 220 is the higher amount. So the taxable benefit will be 220. But for the total taxable benefit for 23-24 will be, students, private usage plus gift of assets, that is 20 plus 220, 240. I hope this topic is clear. By completing this question, we will be winding up today's class, and in our next class we will be doing the next topic, that is beneficial loans and the exempt benefit. By doing this, we'll be completing our chapter in the next session. So I hope students, in today's session we covered the topics related to car benefit, private fuel, pool cars, and assets for private use, and gift of assets. I hope today's class was interesting and all the questions were understood, and each topic was very crystal and clear for you. If you have any doubts, please do message me in the WhatsApp group so that you can ask other students your doubt and your doubts get clear. So I hope today's session was good, students, and very interesting. I hope that in our next session we'll complete this chapter and be moving to our further chapters. So thank you, students. Have a good day. Bye bye.